Welcome to Not Milk Never Milk. Subscribe if you're lactose intolerant.
In this video, I will explain how to trade copper in Zerodha. First, you need to activate the commodity segment in your Zerodha account through the console. This is a crucial initial step. Once activated, ensure you have adequate funds in your trading account to meet the margin requirements for copper futures. Copper is a widely traded and highly liquid base metal on the multi-commodity exchange, making it an attractive option for many traders. When trading copper, you'll primarily deal with futures contracts on the multi-commodity exchange. These contracts are standardized, meaning their specifications are predetermined. Each copper contract has a specific lot size, which represents the minimum quantity you can trade, often 1,000 kilograms. The total contract value is calculated by multiplying this lot size by the current futures price, which is important for understanding your exposure. To place a trade, log into your Zerodha Kite platform. First, add the specific MCX copper futures contract you wish to trade to your market watch list. Once added, select the contract and decide whether to buy or sell based on your analysis. You will then input the quantity, select your product type like MIS or NRML, choose your order type, and set the validity before finally swiping to execute your trade. Effective risk management is vital in commodity trading. Always understand the margin requirements, which are a percentage of the total contract value, as these can impact your capital. It is highly recommended to use stop-loss orders to protect your capital by limiting potential losses. Also, be aware of the commodity market's trading hours, which typically extend from 9 a.m. to 11:30 p.m., allowing for flexible trading opportunities.
Thanks for watching. If this was helpful, leave a like and consider subscribing. See you next time.